Welcome to the Big Mike Fun Podcast, where you'll learn about advanced wealth building strategies from real estate investing to creating massive ROI and secured retirement profits. So pour yourself a cup of coffee, grab a notepad, and lean in, because Big Mike has got the mic, starting now.
Welcome to the Big Mike Fun Podcast. I'm the Big Mike Zlatnik, and today it is my pleasure and a privilege to welcome Mark Podolsky. Hi, Mark.
Mike Zlatnik, how are you?
How are you,
Thanks so
sir?
much for having me.
I hope I pronounced your name correctly.
You did. It was perfect. Yeah.
That's great. Tell us a little bit about you. You are known as the Land Geek. You are an authority, a foremost authority on buying, selling, developing, I guess, raw land. So just tell us a little bit about you and just a couple of words about where you're based, your family.
Yeah, I live in Phoenix, Arizona, and I love making land cash flow.
That's great. How about family? You live there alone? You have
I have
family?
three. Yeah, I have three kids, 21, 18, and 17, two boys and a girl. And I love to travel. And so right now I'm spending time between La Jolla and Scottsdale and loving it.
That's awesome. La Jolla is beautiful.
Yeah.
You ever play golf at the La Jolla, at the Torrey Pines?
I know I don't play golf, which is the weirdest thing. It's like, it's like living in San
Phoenix,
Diego.
you got to play golf, right?
You got to play golf, and if you're in San Diego, you got to surf. I do neither, but I like watching it.
That's cool. So let's go back to the land. Just tell us a little bit about what is raw land in general, and how do you create cash flow on raw land?
Sure. So let's just use you as a case study. So Mike, where do you live?
I live in Brooklyn, New York.
You're in Brooklyn, New York. Okay, I'm going to assume that you own 5 acres of raw land in Colorado, and
Okay.
you owe $200 in back taxes. So you're advertising two important things to me. Number one, you have no emotional attachment to the raw land. You're in New York, the property's in Colorado. And number two, you're distressed financially in some weird way. Because we don't pay for things, we don't value them the same way. You haven't paid your property taxes. As a result, the county treasurer keeps sending you notices saying, Mike, if you don't pay your property taxes, you're going to lose that property to a tax deed or a tax lien investor. So all I'm going to do is look at the comparable sales on your 5-acre parcel. I'm going to take the lowest comparable sale and I'm going to divide by 4. And that's going to give me what Warren Buffett would call a 300% margin of safety. So let's just use easy numbers and say the lowest comparable sale is $10,000. So I'm going to send you an offer for $2,500. Now you accept it. Why? Because for you, $2,500 is better than nothing. In reality, 3 to 5% of people accept my quote unquote top dollar offer. But now that you've accepted it, I have to go through due diligence or in-depth research. I have to confirm you still own the property. I have to confirm back taxes are only $200. I have to make sure there's no liens or encumbrances, no breaks in the chain of title. So this whole list, and we can close it through a title company, or if it's $5,000 or less, I'll outsource all that to my team in the Philippines. They're connected to an American title company. But then I'm going to sell your property 30 days or less. I'm going to make a cash flow like a rental home. So Mike, I have a built-in best buyer. Do you know who it is?
No.
The neighbors. So I'm going to send out neighbor letters saying, hey, here's your opportunity. Protect your privacy, protect your views. Know your neighbor. Oftentimes the neighbors will buy. Now, if they pass, I'll go to my buyers list. The buyers list passes, I'll go to a little website you may have never heard of. It's called Craigslist, 10th most trafficked website, or 15th most trafficked website in the United States. I'll go to one I know you've heard of called Meta, or Facebook buy-sell groups in the marketplace. And then I'll go to the lands, landmodo.com, landandfarm.com, landsofamerica.com, landflip.com, landhub.com. These are platforms where people buy and sell raw land. But the way that I'm going to sell it is I'm going to make it irresistible. So all I'm going to ask for is a $2,500 down payment. And then I'm making a car payment. Let's say $297 a month for the next 84 months. So it's a one-time sale. I get my money out on the down, but I could go 6 to 10 months out. And then I get passive income of $297 a month, the next 84 months, no renters, no rehabs, no renovations, no rodents. And because I'm not dealing with the tenant, I'm exempt from Dodd-Frank, RESPA, and the SAFE Act, all this onerous real estate legislation. So the game that we play is, can we create enough of these land notes where our passive income exceeds our fixed expenses? And now you're working because you want to, not because you have to.
Yeah, I certainly love the model, and no number of guys could do this in similar manner. But the first question, do you actually transfer the deed and record deed of trust, or do you sell it on a land contract?
Land contract. And the reason being, there's no cost of foreclosure. So
Right.
if they default, not a problem. We lower our cost basis and we just resell.
Oh, on a very cheap lot, that's your only viable option. Otherwise, the cost of foreclosure will eat all your equity away.
Exactly.
Yeah, I totally know that. We actually know a couple of guys, and they've been on the podcast too. They do some very similar, guys called discount lots. They also buy land and then they sell it just like you to I guess the neighbors or whoever wants to buy it. That basically has an American dream of land ownership, and they can't afford to buy it in cash, so they get a payment plan, and it makes total sense. So,
yeah, I mean, the problem is you can't get a loan on raw land.
well, not only you can't get a loan, nobody wants to deal with those small loans, right? And no bank,
Right.
there's no economics for a bank to loan you money, even if it's not $10,000 lot, if it's 20, 30, 40, even $50,000 lot. And you're right, it's not Fannie Mae, Freddie Mac, it's not owner occ, it's basically raw land. So it's almost like there's no, unless you have a private banker, they'll give you a private loan, but beyond that, it's just no financing available.
Right.
So how do you find your lots? How do you find so obviously you gave an example of Mike living in New York and then owning lots in Colorado, and I still wouldn't. It's a little difficult for me to figure out why would I want to buy a couple of acres of land in the middle of nowhere. Obviously, Colorado is beautiful.
Right.
So I guess folks inherit the land, or how do they come to own it and not doing anything with it?
Yeah, I mean, it's interesting because a lot of people want it as a legacy investment. So, Ted Turner's got that great quote, buy land, it's the only thing that lasts. So a lot of people will just buy it and hold it. The property taxes are inexpensive, and they'll go out there with their family or friends, and they'll camp or they'll hunt, they'll fish. And a lot of preppers, these are people hoping for the best, preparing for the worst. They want raw land. People that don't like people want raw land. So, it's an interesting niche. But yeah, I mean, I've done this 6,000 times. I've never been stuck with a piece of raw land. They all sell.
No, that's very cool. I certainly love the model. It makes total sense. And your bid and ask difference is just huge. You as a buyer, you basically you're offering very little steep discount, 1/4 what it's really worth, if not less. And then you're selling it. You're going to sell it probably at the full market value, because it's a limited, especially to the neighbor, right?
Right.
They have unique. To them, it's much more valuable than to an average Joe out there.
Right.
So how do you find them? I mean, how do you find people who own these lots? You advertise, you reach out to folks. You mentioned Meta, Facebook, or any other sources. I guess. How do you find people to basically sell you the land?
So, this is all public information. So where we want to start is our county research. Because Mike, let's face it, nobody wakes up and thinks to themselves, boy, I want some raw land in Iowa today, unless you live in Iowa. So we want to go to the Sunshine States, Colorado, Arizona, Nevada, New Mexico, Texas, California, maybe a little bit in the Northwest, Washington, Oregon, and then Florida. So we want to look at those counties where there's a market and do our research that way, and then contact the county assessor and get the list of people that own all the property and then scrub that list and get it down to vacant land, and then do one more scrub by assessor's parcel number or APN number. So you're in subdivision. Because if I send someone an offer with 40 acres, the same as 5 acres, the 40-acre person is going to send me that glitter in the mail. So then you price it correctly and then send out your offers.
So you scrub the data, you get the data, you send folks letters that want to buy your land, and most folks actually respond. It's been crazy out there. A lot of postcard marketing. Will want to buy a house, or people send letters. You still get responses. People don't throw it out of, throw it in the garbage.
Yeah, I mean, there's such a big market. It's not like housing, whether it's, housing's sexy, right? Like, you're not going to go, like if you go to a RIA meeting and there's 100 people in that room, 99 of them will be house flippers, landlords, and wholesalers. You and I would be the only land guy. You're not going to go to HGTV or the DIY network and see flip this land. The before picture is raw land, the after picture is raw land. So it's sort of this unloved, very boring niche. And it's just a huge market.
Yeah, makes total sense. So how do folks work with you? Obviously, you find cheap land, you buy it, you sell it to the buyers. But the people who buy that land are, I guess, your end user, your purchaser.
Right.
Do you work with folks that invest into this, or you don't actually need any folks to invest? You just need people who want to buy from the land from you.
Yeah, I mean, we do work with accredited investors as well. So if we have to have a one-to-one conversation with them, we can talk to them about it.
Gotcha. So what do you think about this whole strategy in lieu of what's happening out there today with the kind of pending recession? How does this asset class do during a potential recession?
So this asset class actually does really well, relatively speaking. So, we're in a long tail of real estate. So we'll see commercial and residential getting hit, and we can sort of start adjusting our pricing from there before our market will get hit. So for example, in 2008, 2009, I did just fine. It was 2010 where we had a lot of defaults on our land notes. So once I kind of learned about this cycle, it took about 2 years to rebalance the portfolio and figure out the new pricing. So the other issue is like in an inflationary environment.
How much correction did you see from 2000?
50. I lost 50% of my land notes.
So people basically bugged out. People who were paying you 50% of them roughly stopped paying.
Stop paying, correct.
You still bought them so cheap that I guess you still did okay, right?
Oh, I did great. Yeah. So
if you bought it for a quarter and you sold it for a full price and 50% don't pay you, you're still 50% of the people still double what you paid for it is still paying you, right?
Right. And the other issue with this niche is that we have no debt. So because we don't have debt, we're not going to feel the accelerated pain of a recession or a depression in the asset class.
So the worst thing you just hold the land, but at some point you need to continue to collect on your receivables. As long as good enough percentage of people are paying you, you're still okay.
Right. Yeah, exactly.
Interesting. I guess you don't do anything with the land. You don't do any improvements. You don't build a shed. Nothing. Like you basically buy raw. You just market it and let the buyer do whatever they want to do on the property. Exactly. I was interviewing another guy who was buying something very similar. Doug Smith out of Dallas, and he was buying like 100 acres and then chopping it up into smaller parcels and then selling them. But he would do a well, he would put in power lines, a few other things, and you don't do any of that stuff. No, I mean we typically don't. No. Interesting. What about? I was talking to yet another group of folks with raw land. They buy also acreage and then they sell timber. Yeah, it's a great model. I don't know if you do any of that, because the land still has some value, long-term value, but they could sell a good amount of timber, especially, when timber price is high.
Yeah, we don't focus on it, but we'll definitely do it if we find a large plot. We'll definitely sell for timber as we clear it and subdivide it.
Got you. So, where do you see that this is going? Is this, by the way, one question, is this legal in all states? Is this, I think some states have had some challenges, like Texas, land contracts are generally not very welcome.
Yeah, so Texas and Florida land contracts are not welcome. There is a way to structure it so that you can still do it, but it takes a little bit of legal finessing.
Okay. So just the contract have to look a little differently.
Right.
Okay. Do you see this as an opportunity to, again, and the way this is, we're living in a post-COVID world, and folks have been wanting to get away from the big cities and now coming back. Is this something that's just going to continue to be ongoing asset class? And what do people do with the land? Like, I mean, what do they go? They come out, go shoot their guns. They come out to build camping grounds. What do they do?
I mean, again, like I said before, a lot of them just want to use it as a legacy investment. They might use it recreationally, but for the most part, they're not going vertical on it.
Okay. I guess it's an American dream, own a few acres of land in the middle of nowhere. I never thought this would be something people want to buy for investment as much as more like recreational. You get 2 acres of land and you want to go camping or something.
Right.
Okay, so how do investors work with you? I'm just curious. What do folks do? They reach out to you and say, "Hey, I want to invest in this raw land. I want to make a deal with you," or what? How does it work?
Yeah, it's literally that simple. They just email me and we get on a call and we talk to them about it.
Did you just do a bunch of partnerships, or you have a fund, or I'm just curious?
Yeah, we do both.
So you have a fund that invests into is it 506c, 506b fund, or is this just a bunch of individual partnerships?
It's a Reg D.
Well, it's both are under Reg D.
Yeah.
Is it the B or C?
I believe it's a B.
It's a B. Okay.
Yeah.
And what kind of return have you been able to get investors?
Well, I don't like to talk about it publicly.
Okay. It's a Reg B fund. You can't talk about it publicly.
Yeah.
Okay, fair enough. What else is interesting in this neck of the woods? What other, I guess, opportunities or kind of hidden treasures in this business?
Well, I mean, I think it's a great model in the sense that when there is inflation, this is a typical inflation hedge.
Why?
And why? Because it's got a fixed supply. So when there's inflation, people want to go to assets that have a fixed supply. So, for example, gold, silver, raw land. You can see why housing keeps going up in value because the builders have stopped building. So you've got a huge supply demand issue. At some point, that's going to have to correct itself. But raw land is just sort of just enjoying the run, as is other fixed supply assets. You could say Bitcoin if you're into crypto. So when you've got inflation like that, people, cash is trash. So essentially, when you're buying land, you're essentially selling dollars.
Yeah, that I certainly believe in. The classic inflation model, 10 apples, $10. What happens when you have $20 and still 10 apples, you end up paying $2 an apple versus $1 in the past. And right. Certainly printed a lot of money in the last few years. But back to what about interest rates? And well, I guess it doesn't impact you at all. The housing is gonna care because the mortgage payments are going up. But for land, if you're selling it on seller financing, you're still going to charge the same amount of money as you were charging before.
Correct.
So I guess you're not impacted by rising, or not much impacted by rising interest rates. You just the only thing that you worry about is weakening demand for the land. If there's a recession, people stop buying these recreational investments or these whatever you call them, legacy investments, that because it's cash out of their pocket, so they worry more about.
Right. I mean, when there's a recession, if you're in a recession-proof business, you're in good shape. But typically, you're gonna have to ride it out, and we do a profit-first model to make sure that we're being fiscally conservative, and we can ride out any bumps and reprice our portfolio and resell the land. But luckily, even in 2010, I mean, they all sell at the right price.
How long have you been doing this model?
I've been doing this full time since 2001.
Gotcha. So you've actually gone through the I guess downturn, 2008, and did you lose money during that? You have 50% of the people stopped paying you, but did you lose?
I mean, no. I wrote a book about it. I wrote Dirt Rich. I talk about my story and how I handled it. But really, Frontier Properties, the investment company, was profitable every year. I myself had what I call Parkinson's law of money. So the more money I made, the more money I spent. So when 50% of my income got hit, that was no fun. So I personally had to make adjustments.
Yeah, makes sense. By the way, do you see inflation slowing down? I mean, it's kind of a weird environment. One of the things, I mean, well, a little off the tangent, but still, one of the weird things is one of the most recent commentaries I heard. This inflation is caused heavily by supply chain more than anything else. And the question is, will the rising interest rates fix the supply chain? And the answer is no, we won't.
No. So my guess is that there will be a repricing, and we'll just have like sort of this. Well, I think there's only two ways out of it, really. So either we reset the long-term debt cycle like we did in World War II, and we no longer become, the world currency essentially, and because we default, right? As a country. I mean, let's say that you borrow $4 trillion from me, right? And I can set my own interest rate, or you can set your own interest rate. How high are you going to set the interest rate on yourself before you're going to default?
Yeah, it's almost counterintuitive. It's crazy that the U.S. sets the interest rates. Yeah, the interest rate is supposed to reflect risk, but in reality, it doesn't. It's because of U.S. I guess. Well, in theory, the Fed doesn't control interest rates. Right? I mean, they certainly have a policy, and then they can set targets, but the broad market sets the interest rate depending on the risk. In theory,
right. And the other issue is we're not the only irresponsible countries out there. I mean, globally speaking, they've all pumped too much money into their economies. Right. So it's going to be a bad recession when it hits. It's not going to be. There won't be a soft landing, but I don't know, exactly when it's going to happen. It just seems inevitable. It's going to happen, and I feel like we're just overdue. So it takes a while for that $4 trillion that's been pumped into an economy to work its way out, essentially.
Yeah, that's an interesting theory. We could certainly debate it and for a long time, and it feels like the rates only will go up a little bit. As much as they want to go up higher, at least the Fed has set up the song that they want to hike. But practically speaking, once the recession hits, the U.S. economy is just too over-leveraged with cheap debt, and rates can't really go much higher before the pain sets in to the nth degree, and then they're going to reverse the course.
Right.
But back to the land. So I'm just curious, what's the typical taxes on? What are the tax rates on raw land? So if you buy a $10,000 parcel, what are the annual taxes?
I mean, they're really cheap. It's, a $10,000 parcel of land. At the most, it might be $100 a year, the taxes.
So it doesn't really have a lot of downside. It's almost like you buy it, the taxes are very low, and it doesn't depreciate. So that's the strength of owning this land. And even though there's no practical immediate use for it, but as the world population continues to grow, at some point more land will be needed for other things beyond. Because there's still a lot of raw land, and living in the city like New York, it's almost the night and day difference when you understand how much a small lot of land costs here versus like in the middle of Arizona.
Right, exactly.
So it's fascinating. In Manhattan, developer could pay $10 million for fairly small, piece of land to build a skyscraper, and this is just again a small plot. And in Arizona, you could probably buy, I don't know, thousands of acres probably.
You could buy several towns. Exactly. Yeah.
How would folks get a hold of you? Basically, is there a good website?
Yeah, the best way is thelandgeek.com, thelandgeek.com. And if people want to try the model, I've got a free course. They can go to thelandgeek.com/quick deals.
Gotcha. Thelandgeek.com, and they can take it from there if they want to. Most of the folks that we work with, obviously, the capital investors, they're not necessarily people who will try to buy and sell land. It's an interesting model. You have to be a specialist. You're a specialist. We know the group, as I mentioned, discount lots guys, as specialists. I feel that this is a game of specialization like anything else. The same way you could be a multifamily specialist or self-storage specialist, or you could be a raw land specialist. You can't be a jack of all trades. You have to know your neck of the woods, your specialty very well. So,
yeah, exactly. I mean, I'm a inch wide and a mile deep.
Makes total sense. Appreciate your wisdom, appreciate sharing, and folks will reach out with questions, follow up. And any final thoughts, any good book recommendation besides your book?
Yeah, I mean, I just read 4,000 Weeks by Oliver Burkeman. It's a great book. If you're the kind of person that has anxiety about getting enough done, or you're sort of, one of those people that love looking at productivity hacks, this book is just the antidote. It will just make you just so calm. So 4,000 Weeks by Oliver Burkeman.
4,000 Weeks. Thank you. Like anything else, all good things come to an end. So does this episode. Appreciate you coming on the episode and sharing. And thelandgeek.com once again, folks.
Thanks, Mike.
Thank you for listening to the Big Mike Fund Podcast. To receive your copy of Mike's How to Choose a Smart Real Estate Fund book, head to bigmikefund.com or visit Amazon and type Mike Zlotnick. Keep listening and keep investing Big Mike style. See you on the next episode.